Dear students, welcome to my channel. In this video, I am sharing 11th Accountancy Chapter 4 Ledger. Don't skip the video, watch fully. Those who have not subscribed my channel, subscribe and share with your friends. Introduction. Ledger account is a summary statement of all the transactions relating to a particular person, asset, liability, expense or income which has taken place during a given period of time, and it shows their net effect. So in simple words, when we say what is ledger account is, it is it is a summary of all material information relating to a particular person or asset or liability will be recorded at one place under one head during a given period. Why we prepare is to get all information about a particular account. For example, if we want to know any information about sales, we prepare sales account, and purchase or cash. It will give an information at a glance. So we prepare ledger accounts. Ledger is known as the principal book of accounts. It contains all sets of accounts, namely personal, real and nominal accounts. In this video, I will tell you the procedure for posting, how journal entries, how we post into ledger accounts. First, I'll show you the format of ledger account. Here we have two sides, and in the center you should write the name of the ledger account. On two sides, that is debit side and credit side, we have debit side date column, particulars, JF, that is journal folio, journal page number and amount column. Same on the credit side also. And now we'll see, I have taken one example. Two entries I have taken: cash account data to John's Capital, purchases account data to cash. So now I am preparing cash account. So if I am going to write, if I am going to prepare cash account, I have to see the cash entries, entries with cash account. So in this example, two entries, both the entries have cash account. So in this first entry, cash is debited. Okay, so if I have to open a cash account, I have to write in the middle the name of the account. On this DR will indicate debit side, and you have to put CR for credit side, and I have to fill all this information. And now in the first entry, cash is debited, so I have to write this John's Capital on debit side, and you have to fill the date column, and then particulars column you have to write with the word to John's Capital. When you are writing on the debit side, you have to use the prefix to, and when you are writing on the credit side, you have to use the word prefix by. Okay, now you understood, I hope. You have to see the journal entries with cash, and you have to see whether cash is debited or credited in that journal entry. Here it is debited, so I am writing this John's Capital on debit side. Now in the second entry, cash is credited, so I am writing this purchases on the credit side. I have to fill the date column, and then I have to use the word by, purchase account, and fill the amount column. I'll show you the John's Capital account. Here I have to see the entry with the John's Capital. Here first entry, here John's Capital is credited, so I have to write this cash on the debit side. See, I have to fill the date column using by word. I am writing this cash account with the amount. And in the second entry, there is no John's Capital, only one entry, so I have to post that in the on the credit side. And now next is purchase account. In the purchase account, first entry there is no purchase, so in the second entry purchase account is there, but here it is debited, so I have to debit this cash on the I have to write on the debit side. So like this I should do. I hope you understood. Now we will balance the account. See, the same example, I have recorded John's Capital and by purchase account. Now if you know the balances, it will be easy for you to put the total. Cash account, all assets have debit balance, so here it is a debit balance, so debit side will be more amount. So first I have to put the total of debit side, and the same total I have to write it on the credit side, and then if any entries are here on the credit side, I have to subtract with this total. See, I have 50,000 and I have spent money for purchasing of goods 5,000. So when I subtract, the remaining will be the balance. So when we write by balance carried on, have to put the last date of the month. When you write balance carried on, on the opposite side you have to write the balance brought down. Now next entry, purchases account. See here, already we posted in the, now there is only one entry, so debit side, so I am the total of debit side, same total I have to put it on the credit side. Here no entries are there, so same that amount I have to write it as a by balance carried on with the total amount, and then on the other side, see, carry down, when you write on the opposite side you have to write the balance brought down. And next, John's capital. Here we have only one items to be posted, so we have posted. So credit side is I have to put the total, same total I have to put on the debit side, and nothing had happened there, so the same I should write it as a balance carried on. And then opposite side I have to write the balance brought down. When you are writing balance brought down, you have to write with the next day date